Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals. Let's talk gold futures. April gold future contract yesterday settling at 1321.5, jumping on the open to 1325 and then jumping to 1335 on the high side, settling more down at that 1326 and change area. That puts gold up 2 consecutive days now. The post FOMC gains held. Initially, when the FOMC first made their announcements and talked about the sort of revised predictions for GDP and for economic growth in the U.S. Gold had fallen and the dollar had rallied, but the reverse actually ended up being true as they sort of softened in toward their commentary and the press conference that followed the Fed decision. Now, inflation fears are starting to come into the gold conversation. Now, historically, gold is not a great inflation hedge long term, but it is short term because it tends to go opposite of inflation. And the 3 hikes in 2018 that Jerome Powell kind of stuck with pushed some people to think that they should start to fear inflation. It really started to get to be this idea that the Fed might be a little bit behind the curve and that you might have to have some gold in your portfolio, and the short-term traders are expressing that through the futures contract. So those short-term inflation fears, with the Fed seeming slightly more dovish in the short term, at least as dovish as they were before, with a little bit more hawkishness pushed out to 2019 and 2020, stoked a little bit of this idea that if inflation did come, the Fed would be behind the curve. And then also trade war. President Trump set to announce details of the tariffs that he announced on China earlier this morning. 50 billion US dollars in tariffs against China. Still a lot of details to work out. There's a 60-day public comment session, 60 days of sort of a cooling off period while the public, corporations and politicians can comment on the tariffs before they go into effect. This seems to me to be quite a shot over the bow in terms of the starting of a trade war. China has said as much. I'm paraphrasing. China said that if he did this, this would be the first shot in a trade war. And again, paraphrasing, it's not an exact quote, but that's essentially what they said. Now, if you look at this particular effect, the VIX jumped about 14% into that 20 handle again, which again puts geopolitics on the gold front, helping gold hold their post-FOMC gains. This is Bob Iaccino talking about a slightly higher gold contract from the CME Group trading floor in Chicago.